Okay, now see this question. Now the next topic uh, in this chapter, or you can say the last topic of this chapter, is asset disposal account. So till now you have learned how to calculate the depreciation as per straight line method and written down value method. And there are two methods of accounting for the depreciation. One is charging to the asset account and second one is provision for depreciation account. So both of the methods are also learned. Now the last topic is asset disposal account. Sometimes what company does, they prepare a separate account when they sell any asset, any of the fixed asset. So that actually account is known as asset disposal account. When we are preparing all, when we are entering all the entries relating to the sale of any asset in a particular account, separately maintained for that, that is known as asset disposal account. Now, when the question asks you to maintain the asset disposal account in that situation, how we will be maintaining the accounts, how we will be recording the entries, that we have to see. Okay. So now see this question. On 1st April 2016, Hind Oil Limited purchased a machinery for rupees 8 lakh. On 1st January 2019, a part of this machine purchased on 1st April 16 for rupees 1 lakh was sold for rupees 44,000. And on the same date, a new machine was purchased for rupees 1,20,000. Depreciation was provided at the rate of 10% per annum on original cost of machinery, and accounts are closed on 31st March every year. Okay. So now we will be starting from the year 2016-17, and on April 1 we have purchased, and right now we are doing question when provision for depreciation account is not maintained. So when provision for depreciation account is not maintained, we will be maintaining only single account for the asset, that is machinery account. So here we will make the entry to bank account, and the amount will be 8 lakh. Now we have to see whether any other transaction is there in 16-17. So there is no other transaction given in 16-17. So we will reach to the end of the year 2017, March 31st. By balance, sorry, by depreciation account. Now we will calculate the depreciation at the rate of 10% per annum, and the method adopted is on original cost, that is straight line method has to be adopted. So the depreciation will be for 1 year 80,000. We will total the debit side first. Then we will write it here. Then it will be by balance carried down, and it will be 7,20,000. 2017 next year, April 1, to balance brought down opening balance is 7,20,000. Now again there is no other transaction given in the year 17, 18. So we will reach to the end of the year again, 2018, March 31, by depreciation. Now the method is Stirland method and the one full year depreciation is 80,000. So it will not change in this question. It will remain 80,000 for this year also. Then buy balance carried down. Seven lakh 20,000. 7,20,000 and balance will be 6,40,000. Now coming to the third year, 2018, April 1. To balance brought down 6,40,000. Two 2019. Now there is a transition on the date 1st January 2019. So our year is from April 1 to 31st March 2019. So that's why this transition will fall in this year. So on 1st January 2019, a part of this machine purchased on 1st April 16 means you are selling a part of this machine, not the full machine you are selling. For rupees 1 lakh was sold for rupees 44,000. So you have sold out a part of this machine. The cost of it was rupees 1 lakh on 1st April 16 and you have sold it out for rupees 44,000. Now the question is saying that you have to show the machinery disposal account. In that situation, what we will do, we will first record its depreciation January 1 by depreciation account. Now we have to see its depreciation, how it will be calculated. Let's see. Working notes. Depreciation on machinery costing rupees 1 lakh. So its 1 year depreciation will be yearly depreciation is equal to 1 lakh multiplied by 10%, it will be 10,000. And for 9 months, because we have sold out that machine on January 1, so we have used that machine from April 1 to January 1. That will be a period of 9 months. So in that situation, it will be is equal to 10,000 multiplied by 9 upon 12. So it will be 10,000 into 3 upon 4. So it will be 7,500. So here we will charge the depreciation for that 7,500. Now, usually what we were doing till now, we were recording here sale entry like this by bank account. And we were writing the sale amount here. But now the question has asked us to prepare the machinery disposal account. So what we will be doing, we will just transfer the written down value of this machinery which is sold to the machinery disposal account. So here by we will write by machinery disposal account. Now when I want to transfer it to machinery disposal account, I will first calculate its written down value on January 1 that I need to transfer from here. So I will make a working note here. Second, calculation of written down value of machinery sold so first we will write the purchase value of it. So cost of the machine on April 1st 2016, the cost was 1 lakh rupees. Now we will charge its depreciation less depreciation. First year will be 16-17 and its 1 year depreciation will be 10,000 simply. Then next year will be 2017-18. Its depreciation will be 10,000. Then next year will be 2018-19 and in this year we are charged depreciation of 7,500 for 9 months. 9 months. So if we will total it, that will become 27,500 and the written down value WDV as on January 1, 2019, it will be 1 lakh minus 27, it will become 7, 1 lakh minus 20, 80 minus 7, 73, 72,500. This will be the written down value of this machinery which we have sold on January 1, 2019. So this written down value will be transferred from this account to the new account that is known as machinery disposal account. Now we will come to the machinery disposal account. And now see what will be the journal entry. If you will see the journal entry, it will be machinery disposal account debit to machinery account. So machinery disposal account debit to machinery account. Here the entry will be on January 1 to machinery account. Now the amount will be 72,500. Now here we will do all the journal entries relating to the sale of the machinery because we have sold out this machinery. So on January 1, we will record the entry here by bank account. By bank account. And we have sold it out for 44,000. Then now depreciation has already been recorded for it. Bank account entry we have done. Now finally we will calculate the loss or profit on the sale of it. So the sale value is 44,000 less WDV as on January 1, 2019, and it will be 72,500. So finally we can see that the written down value is more than the sale value. So we will have a loss on sale of it. Loss on sale of machinery. So 72,500 minus 4468 minus 4028 27,500. 72 minus 468 minus 4028 28,500, sorry, 28,500. So the loss we will write it here now by statement of profit and loss 28,500. And now you can see this account will become zero balance because this account has been prepared only for the purpose of sale of machinery. So here we will total 72,500 and here the total will also be 72,500. Now coming to the machine account again, the balance of the machinery will be now out of this. We have sold out this machinery and so it has been nullified now. Now we have to find out how much value machinery we are having now so that we can charge the depreciation accordingly. For that, you see here, see the total cost of the machine was, total cost of the machine was 8 lakh. Out of that, we have sold costing rupees 1 lakh machinery we have sold. The cost of that was rupees 1 lakh, so we will deduct 1 lakh from it. So the balance of the machinery will be balance machinery is equal to rupees 7 lakh. So we have to charge the depreciation on this machinery. We will write here 2019. So 2019 is already written. March 31st by depreciation account 70,000. For this machinery we have calculated the depreciation, but we have purchased one more machine of 1,20,000 on the same date. So January 1 to bank account 1,20,000. We will calculate its depreciation also. So again we will be doing the journal entry by depreciation. Now at the rate of 10%, its depreciation will be 12,000. I will show you it as working note here. You please put the appropriate title for that. 1,20,000 multiplied by 10 upon 100 multiplied by 3 upon 12. So it will be 12,000 and it will be 3,000. So it will be 3,000 here. So now we have calculated the total depreciation. We can calculate the balances now by balance. Carry it down. So the only change in this question is that we have not done the sale entries in this account. For that we are maintaining a separate account that is known as machinery disposal account. So the first machine balance will be, or we can calculate the combined balance. For that we will total it. The total will be 7,60,000. And if we will total it here, 7,60,000. Now we can separate all the amounts here. So it will be 0, 0, 5, 5, 10, 0. Then 8 plus 2, 10 plus 3, 13, 7, 20, 2 plus 7, 9 plus 6, 7, 16. So it will be again 0. And 1 is carry on, so it will be here 6 lakh. So the balance will be now 6,07,000 for the machinery account.